Hello, hello, guys. Good morning. It's still morning here in East Tennessee, and there is a fly in my face. I just literally appeared out of nowhere. So look over him. He's interested in hearing the live as well. So I wanted to talk a little bit today about the infinite banking concept again, because we were talking about the infinite banking concept yesterday. I had a whole lot of questions come up from that, and I want to make sure that you understand what this concept means. So when you go to my playlist, you can find the infinite banking concept there. There's going to be videos there. I have a ton of videos with Chris and Ogle that is just in the channel. So if you want to do a search with VANNtastic and Chris and Ogle, you can see some videos that we've done to help you understand how to use that concept. And we even have a team that works with the concept. So I'm telling you, you don't want to miss out on what the concept may do for you financially. Also, I was just working with a lady. She had money sitting in her safe. She had monies that are sitting in separate accounts in her bank. And that right there is a wonderful way to get your own concept started, or your own concept, your own strategy started. Okay. It's super important that you at least get educated on what that means for you, because if you have money sitting anywhere and then you have debt, you are really just doing yourself an injustice for how you could be gaining extra money when it comes to how these things grow with compound interest and the dividends that they pay. So just wanted to give you all a heads up that we are going to have Chris Noggle jump on here with us just a minute. I cannot be any more excited. So let's give him a second to sign in and say hello. Chris, can you hear me okay?
Yep. How are you?
Hey, how are you?
Oh, sick and overwhelmed.
Ah,
I have been sick for almost 4 weeks now. I can't get healthy.
ah,
Stress is not a good thing.
no, it's not. And you're still in a cold state, or is it warmed up there?
No, it's warm. It's warm. No, it's
Oh,
just the after effects of just continuous travel for 4 months, every single week. Just wears your body down.
you're going to have to slow it down, is what you're going to have to do.
You're
Well, I don't know if you're aware or not, but we are on a live stream on YouTube right now.
Oh, did
And
not know that.
I just want to jump up and run around the room because Chris and Ogle's on air.
Hello, everybody. Sorry, I didn't know we were live. I would have saved you the gossip there.
No, you're good. No, I'm just so tickled that you have joined us, because I did a live yesterday and I've had so much feedback, so much excitement about what this concept is, the infinite banking concept, and how it's amazing. It's amazing. And so I do basic breakdowns. Okay. So I did a basic breakdown yesterday. I was going to do it again today, showing people how they're sitting with money in a savings account doing absolutely nothing. I just worked with a lady. She had over $40,000 sitting around, and she's like, what can I do with this?
Mhm.
And I get so excited because my own policies are doing so well, that I just asked you to jump on, and you did. I'm so thankful that you came in.
Absolutely.
You're the best at explaining this concept and what it looks like for, anybody that has cash flow, basically, right?
Absolutely. I mean, the way I've been doing it so long. So to me, it's just so simple and people complicate it because they make it about a product instead of what it really is the process of how you actually take back the banking functions in your life. If, if all people did is focused on the process and then reverse, sorry, and then look back as to why we use a specially designed whole life as the mechanism, or what we call the machine. It's very easy because it's just the only machine that can do what it does. Savings accounts can't, retirement accounts can't, there's nothing else that can do what the specially designed whole life can. So it is just the most efficient vehicle, but it is not the most important thing at all. Actually, it's probably one of the least. If you think about it, the whole life is just what you run your money through. So like, I'll use that person's example. Like, that person's got 40 grand sitting in a bank. Like, let's just talk about bank accounts, right? We all make money, and you got money sitting in a bank account. A bank account is going to pay you whatever interest rate the prevailing rate is, the prime rate. So, maybe you're getting 2 to 4% in a high yield savings, but the average is about 0.47%. So let's round that up to 50 basis points. That's 0.5%. That is the 10-year average. Actually, that's above the 10-year average you're going to get in any bank account in the country. So right now is a unique time because rates are high, still elevated. So you can get high yield savings anywhere from 2 to, the highest I've seen was 4.5, but I actually believe that might have even reduced down to 4 now. But still, when you put money in a savings account, okay, when you want to pay off debt, let's just pick on debt because I know that that's something you talk about a lot. When you want to pay off debt, you have to take a withdrawal from the bank account and you pay off the debt. And then if we could just imagine this, I don't have anything to draw, but I want you to all envision just a circle, right? That's how your money has to flow. You have the choice of deciding where that money starts. So let's just say this is where it starts. This is your savings or your checking account. You want to pay off a credit card. You take money from your bank account and you pay off the credit card. When that money left the bank account, let's assume you're making 4% in your high yield savings. When that, we'll just use $100, leaves your high yield savings, it's not making 4% anymore because you took the money out of the bank, and the bank does not pay you interest on money that is not in the bank. You took that out and you paid off debt, which is great because the debt was costing you more than what you were earning in the bank account. That's always how you got to look at this, right? It's an arbitrage. It's a spread. If you're making 4, but you're paying 20% on a credit card, obviously pay the credit card off. That's like making a 16% net spread on your money, because if you were paying 20 to the credit card and you were only making 4, if you just take that away, 4 minus 20, yeah, you're 16%. So that's a really good return. Now, here's where people mess up. And listen, I know we're still talking about a bank account, right? And because I want you to understand this from the simplest process standpoint. What is the infinite banking process? So you took the money, you paid off the credit card. Now, when you paid the credit card off, you used to make a monthly payment every single month to that credit card. Now, let's just say that monthly payment on this is $10. Let's keep this super simple, okay? I don't have a $10 bill here, but $10 is what you were paying the credit card. And that was 20% interest. So everybody's tracking, right? And Christy, just see if there's any questions, at that. But this is simple math. You're making 4, you were paying 20, you took 100 out of your 4% savings to pay off a credit card that you paid off. So now $10 a month no longer needs to be paid to the credit card. But what you're going to do is you're going to make $10 a month payments back to your savings account. So every month you're replenishing the place where the money came from to the exact tune of what you paid off, which was $10. So when you did that, now your cash flow did not change at all. Okay, nothing is different except for the name on the check. The $10 check no longer says Visa, it says your name. Okay, whatever that is. So it's in your bank account. So what was your return? Well, your return is 20% because that's what you were giving away to the credit card. So if you pay yourself the same amount you were paying the credit card, well, then indeed, you're making 20% on the money. That right there is the simplest way of understanding the infinite banking concept. Because what I did is I just showed you a process. Now, if it's not credit cards and it's cars, great. Just replace credit card with your car payment. So you have money in a bank account, 40 grand. Let's say you owe 30 grand to pay off a car, and let's say your car loan is charging you 6% interest, but that 6% interest is costing you, $30,600 a month. Let's just do the same math. You got 40 grand in the bank. What you're going to do is you're going to take 30 grand out of the bank. You're going to pay off the car. The car payment is now no longer needed to be paid to whoever the finance company was. But what you do is you be an honest banker, because I'm trying to teach you how to be the bank. You become an honest banker, so you make the exact same $600 payment that you used to make to the car payment company or the car finance company, but you make it back to yourself. So now every month, the $600 you used to give for the car payment is being paid back to your bank account. How much did you make? Well, you made 6% on your money because you were giving away 6%. But most importantly, when you pay off a car loan, is you got $600 of cash flow back over here. So if you kept doing that, what would happen? Well, you'd get all the money back for every car you buy, drive, and own. So again, whatever this is on the right side of the circle, you just plug in what your need and goal is. I want to pay off debt. Great, debt. Put it in proper order. Christy shows you how to do that. I want to pay off my car, or I want to buy a car. Great, replace it with a car. I want to do private lending. Great, replace it with private lending. Whatever that is, fine. Okay? The only rule is whatever the cost of capital is, you have to make more than that. If you were making 4 and paying 6, of course it makes sense to take it out of the bank account, pay the car off, recapture the money, and then the only calculation you have to figure out is how long will it take for you to recapture the $30,000 you took out. Okay, easy math. Now, I'm going to finish this up. Chris, let me pause there. Does anyone have any questions on the process? It is very simple, and it allows you to take back the banking functions in your life and become the bank. Because if you continue to do that for all your debts and all your loans that you have out there, you would have significantly more money every single month because you would be leaking no money and no interest to somebody else. You'd be paying it all back to yourself, right? That's it. And we'll hit the specially designed whole life and the why behind that in just a second. Any questions?
No, there's no questions. Keep going.
Okay. All right. So now, is the question we ask is the bank account the most efficient thing to use to do what we just said, to take back the banking functions and become the bank? Although it can be, it can work like I just showed you, but is it the most efficient thing? Well, let's dissect what we got with the bank account. Well, we got an interest rate right now that is pretty good, but as soon as Powell or whoever is going to be running the spokesperson for the Fed, whoever that is in the future, whatever they say rates are is what you're going to get. If they decide to drop interest rates 50 basis points to try to stimulate the economy so we don't go into a recession or don't go into a deeper recession, well, then you're now making 50 basis points less, or maybe even more. Because if you were making 4 and the Fed drops rates, guess what your bank account's doing? Paying you less. No ifs, ands, or buts about it. But not only that, your bank account, if you've been paying attention, if you're making 4% in your bank account, at the end of the year, you get this really cool piece of paper, and it says at the top of it, 1099. It's called a 1099, and it usually will say INT. Yeah, that means you got to report that measly interest that the bank account paid you, and you have to pay taxes on that. Okay, so now we've got a variable interest rate that is taxed every single year. Now, if you died, your bank account becomes part of your estate and it's probatable. So now your family has to go through probate for the money in your bank account. So it's a probatable asset. And not only that, you are at the mercy of the bank for everything you want with that, which isn't really such a big deal. So now, if we were to just change one thing, okay, one change, and that is where your money went first. Where would be a better place to store that money? Well, if I'm a logical thinker, I would want a place that pays me a higher interest rate than what the bank's paying me. If I could have my perfect wish list, I would want that interest rate guaranteed for the rest of my life. I don't want to play this variable rate that the Fed is in control of whatever I'm making on my money. I want a guaranteed rate, okay? I'd prefer not to pay taxes on that money. So whatever I make, I'd like to just keep it all. Not only that, I'd like to have liquidity of that money, just like I do my bank account. Okay, great. So I got liquidity of that money. And if I'm really going to kind of stretch for the moon, I'd like to make more than just the interest rate. Okay, I'm guaranteed the interest rate, but is there anything else that I can earn, like maybe a dividend? Okay, great. So these are all things that if I were trying to create my perfect place for money that I would be thinking about, and there are more. I'd like it to bypass probate. I'd like it to be able to provide a benefit for my family when I die that exceeds the amount that I have in the account. I mean, these are all like wish list things, right? Well, if you search the entire universe of vehicles, of guaranteed places you can put money. It's a short list: fixed annuities, CDs. You could maybe call money markets that. They're SIPC guaranteed or SIPC insured, not FDIC, bank accounts, and maybe you could think of a couple more, but it's a small, short list of guaranteed accounts. So in there, you should also include guaranteed cash value life insurance, specifically whole life insurance. So now let's kind of go through what a whole life insurance policy gives you. Now, the specially designed part is equally as important because that's the liquidity. We design it for high early cash value. So let's go through that list. Number one, does a whole life policy pay you a guaranteed interest rate that never changes for your entire life? Check. Yes, it does. The companies that we work with are anywhere between 2 and 3.25% guaranteed for your entire life. Never changes, and it is in the contract that it will never change. Cool, I like that. Now, what else can I get from the insurance company? Well, if I found a mutually owned life insurance company that pays dividends, well, because they're mutually owned, they don't have stockholders, so their policyholders are who get rewarded like a stockholder would. So they pay dividends every single year based on the profitability of that insurance company. So if we picked one of the top 5 mutually owned life insurance companies, we would see that they'd paid these dividends for, 140 plus years. So now, if I add that dividend plus the guaranteed interest, what kind of an interest rate could I expect out of my money? And we would call this a dividend crediting rate because it's the dividend plus the interest. They call it dividend crediting rate. Well, the lowest right now is 5.4, but we can get up to 6.4%. Is that better than what you're getting in the bank account? Holy crap, yeah. It's over 1% better. And not only is it over 1% better, it has a lock, a guarantee on a large portion of that interest rate or of that dividend crediting rate. So that's way better than a bank. Plus, if it's designed properly, the growth of your cash value and your dividends are tax-free. So in order for your bank account to get the same tax equivalent yield or tax equivalent rate as you're getting with a whole life, depending on your tax rate, you might actually have to earn more like 6 to 7% on your savings account to get the same amount as you're getting in a whole life because of the tax-free nature. So already this is sounding a lot better, isn't it? But hold on, there's got to be a catch because whole life has a cost. It's expensive. Dave Ramsey says there's all sorts of commissions and fees and everything else. Dave Ramsey's right, but they can be designed, the policy can be specially designed to reduce those costs because we can put the lowest death benefit on the policy possible under IRS rules, which reduces the cost for that life insurance. The policy service fee on a whole life policy is only $50 to $100 a year. That's a fixed cost. And then the only other variable is the commission. Dave Ramsey loves saying how high the commissions are on whole life, but the commissions are paid based on the death benefit. But didn't I just say we're going to put the death benefit at the lowest amount possible by IRS rules? I did. So in doing that, what I'm actually telling you is you could design a whole life policy that reduces the agent's commission by anywhere between 60 and as much as 90%. So Dave Ramsey, eat your heart out, buddy. We just reduced the commission by literally a significant percentage. And what's the difference in the commission that is saved by you, the client, and that the agent does not get? More early cash value. So now you have higher cash value to use immediately in the first 30 days. And let me just rapid fire, because I got to get on a podcast here in a second. The other things that you get with the whole life is it does not have to go through probate. It bypasses probate. So there is no probate on your whole life, period. Not only that, it is protected against judgments and liens in most states. Okay, you can Google that. You can Google life insurance state lien protection, and it'll show you exactly what your particular state's protections are. Most of them are unlimited. In New York, it is not, but it's still high. A bank account, that's like low-hanging fruit. You get sued, someone trips and falls going into your house, the first thing the attorney's doing is going after your bank account. The last thing the attorney's going to do is go after that stupid whole life policy because they know it's protected against judgments and liens. And lastly, and I think most importantly, because I have a young one, my daughter's almost 5, and I have a family, I want them to be better off when I'm gone. So if I had 40 grand inside of a whole life policy and I die, does my family get 40,000? No. My family gets way more than that. I'm just going to guess because it's going to be based on age, health, and lots of factors. But for me, if I put 40 grand into a policy, my death benefit would probably be somewhere around $500,000. So now I have this major leverage for death. You know, when I die, my family now gets a bump up from 40,000 to 4 or 500,000. You think that's going to put them in a better place? Oh, and by the way, the death benefit's tax free. So now it doesn't really take anyone to be smart. It doesn't take a high level of IQ to understand that when we compare the two vehicles, the machines that we would run our money through to become the bank, which one makes the most sense? The savings account, CD, money market account, or the specially designed and engineered whole life policy? I might do things differently here in Buffalo, New York than you do in the state you live in, but I will tell you, I'm going with the whole life. And that's exactly what I've been doing for a long time. And it has completely changed my life and my finances and will continue to do that because final thing I'm going to say, with the program that I'm on and the thing I just explained to you, there's one guarantee. You will have more money tomorrow than you have today. You will have more money next year than you have today. It is guaranteed and it can never go the other direction. Doesn't matter what happens, recession, depression, doesn't matter. Every year you have more money, and that's because it's guaranteed. You have liquidity, and if you follow that process, you no longer leak money to their bank because you created your own bank. And every payment from now for the rest of your life goes back to your bank, not theirs. How was that, Christy? Was that okay?
It doesn't get any better than that. It doesn't get any better. Can you all hear me? They started sawing. It does not get any better than that. And I get so excited when I talk to people about this every day because I'm doing it. I'm actually doing this. And Chris, you are the reason that I got so excited because they when you told me that day, because I said, why pay back a policy loan? Why do we do that? Because it's a, at the end,
Right.
if family's getting 300,000, they're not going to miss a $10,000 loan that I took out for deduction there. And you said, why wouldn't you? And I'm like,
Exactly.
because
Why?
it's a
See, I didn't get into
payment.
that here. Like,
Yeah, but it like, why wouldn't I? Why wouldn't I pay myself back? Because it's there available for me to use again within 30 days.
immediately, actually, your recaptured money, like remember that credit card that we talked about, that $10? When you put that $10 into the policy, I only showed it going into the bank account, but same thing. If you put $10 into your bank account, how much money do you have? How much more money do you have in your bank account? $10 more. If you put $10 back into your policy as a loan recapture, how much do you have? $10. Nothing less, nothing more. Exactly why you should always put the money back. And people are like, well, I don't know. It was my money in the first place. I'm like, it was your money in the first place that you chose and elected to give away to somebody else at a high interest rate. So you're telling me you were okay with that, but now all of a sudden you're questioning whether or not you should make the same exact monthly payment, interest and principal, back to yourself where you keep it all? I'm sorry. You know what? Maybe you're not a fit for this because you need to go look at yourself in the mirror and check your mindset because you are broken, man. You're broken. It's so simple to understand. Like it is literally just logical why you would pay yourself back. You lose nothing, you gain something, and you have full liquidity of your money, and your cash flow didn't change.
Yeah, it's amazing. And I can't thank you enough for jumping on here. I know you have to go. But I just, I appreciate you taking the
My
time to
pleasure.
come in and give us a 10-minute rundown of what this is about because I try to explain it and you do it so much better. So
Oh,
thank you
thank
so
you.
much,
Well, I hope
Chris.
it was valuable, everybody. Thank you so much for your time today. I got to jump off and do a podcast. Thanks, Christy.
You have a good day. All
You
right.
as
Bye
well.
bye.
Bye-bye.
Guys, he makes it so simple. And when you're talking about a product that is yours, that you're in control of, that's what makes the difference, right? Because when I need to take a loan, guess what? I don't have to go get a credit check. I don't have to see if they're going to approve me. I go to my source that I created that's guaranteed to be there for me, and I take a loan from myself. So why would you not do that? Oh my goodness, this is the best concept that I've come across so far. What I teach to get out of debt, yeah, that's beautiful. I love it. I'm always going to use the lines of credit. But when it comes to where I'm putting my money so that I can turn around and take loans for myself while it's growing at the compound interest, while it's paying the dividends, why wouldn't I do that? Why wouldn't I do that? There's even small businesses out there. They're having cash flow problems. What would happen if they decided that instead of, taking out these MCA ridiculous high interest loans that they are and prepare by having this funding set up through key employees or whatever? The fact is that they would be taking the loans from themselves. Do you know how high some of these high interest loans are? Not just for businesses, but for you as an individual. I mean, how many people are going to these title loan companies and taking out title loans and paying 300 to 600% back? That's not fair. And when you do that, you're just letting them rob you. But if we can, that's the real big deal I have with going to the high schools and talking to the seniors is if I can get a hold of them first and tell them how to use a bank tool instead of them going out and thinking, well, I have to get a student loan. Well, I have to get a mortgage. Well, I have to get a car loan. If I can explain to them how they do not have to use those tools and they can use other revolving lines that's going to completely change their financial life, why wouldn't I do that? So if I'm in my 50s and I'm excited about finances again, how excited is a kid in their 20s going to be when they realize they're going to be a multimillionaire by the time they're 40 because they use their income to serve them instead of throwing it away on these bank loans? You can still have what you want. I want you to have the home. I want you to have 10 homes. I want you to have the car and the sports car sitting in your garage. I want you to have these things, but I don't want you to waste the income that you're out killing yourself to make by using the wrong tools at the bank. That's all it is. I can't be clear enough about how easy it is to get out of debt when you're using the tools at the bank that is going to make your whole financial life different and better. And who is it that we hear saying all the time on YouTube? Oh my gosh, I want to scream. You do not have to get the second job. You do not have to deliver pizzas. You do not have to be frugal. You don't have to worry about gaining extra income. It's not about your income getting larger. It's about you being able to use the income that you are bringing in to serve you instead of how you're throwing it away at the banks. It's that simple. And when you're talking about the IBC, which is the infinite banking concept, you're talking about a guaranteed, I mean, you're guaranteed with the safety of your money. You're guaranteed growth. Those two things alone is what convinced me to start. But when I learned that I can actually use my own money, bring that back to me, and then save the interest that I would be paying to the banks, why wouldn't you do that? Why wouldn't you do that? So I have an example up here, and it's a very short one because I just have a minute. But to reiterate what Chris Noggle just said, and I hope Chris is listening so I can thank him again for coming on and sharing with us like he did. Completely out of the blue, I said, hey, I'm going to go on a live. Do you want to jump on? And he's like, sure, I've got a minute. So when he was talking about the way this works the death benefit is what everybody thinks about is, oh, who wants to buy insurance because, I have to pay for my health insurance and it is super expensive, super expensive. And I have to pay, for my car insurance or, they'll put me in jail, right? So those things, when we think of insurance, it's stressful. It's very stressful and it's so frustrating to have to make another payment every month and you don't even know if you're ever going to use it. So it kind of seems like a waste. So when we think about life insurance, to me, that was the lowest of low. That was like, I do not have the extra money to put into a life insurance policy. I almost thought it was a scam because it's like they're just making money off of you dying. And the fact is, are we really going to die? I mean, who is even thinking about that? So the point is that the death benefit is what people think about when they're thinking about the whole life policy. I know it's not a death benefit. Yeah, that's a kicker. But the point is that you are storing your money somewhere that is growing, I think, the best it can grow, even when you're comparing it to the stock market. Okay. So you've got the guaranteed interest rate. And like Chris was saying, if it's 3.75, it's 3.75 for the rest of your life compound interest. And the dividends, they're not guaranteed, but guess what? They've paid out for over 140 years. So I don't know that they're going anywhere anytime soon, and you're guaranteed not to lose it. I'm sorry. That makes me feel happy every time I say that out loud. So the point is to look into this and see if it's something that you can understand so that you're able to really grow your money, to really get excited about taking the loans from yourself. And just like I told Chris, the day we had the conversation, and I said, why would you pay back a loan that you don't have to pay back? And when he said that, why wouldn't you? Because it's going right back to yourself and you're going to be able to turn right around and use it again immediately. Well, hello, you're sitting here paying a credit card payment and you never get access to that interest that you throw away again. So why wouldn't you pay yourself back so that you can turn around and use it again? Oh, it's just super simple. I just hope that you guys get this because, you do have to really be, thinking when you're talking about these whole life policies because you have to break the mindset that it's an insurance. That was so hard for me. You have to break that mindset, the stronghold, change it, and realize that you're literally becoming your own banker. And a lot of people cannot even fathom that that would be true. I was in the same situation, so I get it. Now, if we're looking here, and I think you can see this, we're talking about a $5,000 credit card right here. Let's say you owe $5,000 to a credit card and it's at 29%. That's the going rate today. What does that mean? You're throwing away in interest. So if you take 29%, the 5,000 times 29%, you're at $1,450 per year interest that you're paying. That's per year. So you would divide that down by 12 months, and that's $120 per month that you're throwing away in interest just because you don't know how to use your money. Just because you didn't take out a whole life policy, put it into, or put your 5,000 or your 10,000 or whatever, or your cash flow that you have coming in per month. Some of you have $500 a month in cash flow. Some of you have $10,000 a month in cash flow. You can do these either way. The lady I just spoke to, she had 40,000 sitting doing absolutely nothing. And so we talked about how she could use that and her savings could be growing while she's actually taking loans from herself. There's so many scenarios out there. If this person had taken a $15,000 line, and I'm just throwing these numbers out there, but if they had 15, 10,000 sitting in a bank or that they get from something, throw it into the whole life, and then turn around and pay off this credit card, guess what? This 120 goes away. Because you could pay that back to yourself to fill this fund right back up. Right now, you're just throwing it away to nothing. So if you have savings sitting somewhere, I don't care if it's 500 or 50,000, figure out a better way to use your savings that is going to keep growing in a way that you could even take the loan from yourself and it keeps growing over there. Okay, if you have the savings, like he was saying, if you have $50,000 in savings and it's growing at even a high of 4.5%, and then you take 10,000 out of your savings to go use it for something, guess what? Now you only have 40,000 sitting in there growing. With this whole life, with this infinite banking concept, if they were to take 7,500 out of this 15,000 and use it, they're still growing at the original 15,000 with the compound interest and the dividends that are paying. Okay, so it would be wrong of me not to share this information. I'm trying to change your mindset because you have to completely break the strongholds of what we've been taught on how to use the bank, how to use these whole life policies, whatever it is. 99% of you are looking at the bank the traditional way. And you're in a mindset of scarcity because Dave Ramsey told you to get there. He told you to stop spending. He told you to go get the second and the third job. He told you to sell things in your home so that you can pay off your debt. But he did not tell you that you're just using the wrong tools at the bank. That you do not have to be making monthly payments to some crazy high interest loan. And for you guys sitting there in a mortgage right now, and you're not trying to figure out how you're going to get out of that, you are throwing away your money that you're out killing yourself to make. Okay, so I want you to get educated. I'm not charging you a dime to get you educated. This is free information. Do something for yourself and for your family and figure out what's going on with your finances, because I can about guarantee you that if you would educate yourself on what you're doing at the bank, you're all of a sudden going to have so much money that you don't even know where it came from. And that's because you're throwing away these monthly payments where they're taking it in interest and you're just giving it away. There's a way to stop that, and I hope that you'll just keep watching videos that you don't watch my videos. I don't care. Go to another channel. As long as they're talking about the velocity banking and the infinite banking concept, then you're going to win in your own finances. You have just got to get educated. Okay, so I hope that you guys are listening. If you want to talk to one of my team members about what options you have with this infinite banking concept, then I'll put a link in the chat here for you. I'm going to have it in the description. We've got well over 100 people sitting in here right now, and you have the option to change the way you're doing your banking. And I hope that you'll get serious about looking into what your own situation is and what options that you have to get out of the struggle. If you're paycheck to paycheck, figure it out, because it's just something that you're doing wrong, that you're not even aware that you're doing it wrong. I'm not making a judgment call here. I'm saying that we all have been doing our banking wrong. And thank the good Lord, he sent me that information about 15 years ago now, to where I don't struggle with that anymore. And I don't want you to struggle with that. Okay. So I'm going to put this, Australia, I do speak with Australians, and some of you guys are figuring out some lines of credit over there. So I can't tell you what they're called. I know you have the offset checking, I believe it's called, that you can pay down your mortgage with. I know your mortgages are very high over there right now. You've got high interest, but there is something there. I do work with them, and I do have Australians that are doing the velocity banking concept. As far as the infinite banking concept, I don't know. I just don't have that answer. I know we can in Canada, but as far as any other nation, I'm just not sure about. Okay. So, yeah, and I expect people to call it a scam when they're uneducated. So when you've got somebody that's calling something a scam, it's just because they're ignorant and they're not even trying to get educated. Okay. So be careful with who you listen to, and what they're saying, because just like he was saying, you have gurus out there that are telling you, that's just not a good idea. They're charging high commissions, they're charging lots of fees. If you haven't been educated yourself, then you don't know the truth. Okay. So I am going to let you guys go. I am going to put the infinite banking information in here. If you want to check with the team about your own situation, feel free to do so. If you have any questions or comments, leave them underneath the video here, and watch videos, get educated, and you're going to figure out that you're not as bad off as you thought you were. Okay. That paycheck to paycheck feeling may just be because you're in the wrong tools at the bank. Okay. All right. You guys have a great rest of your day. Have a great weekend, and I'll see you in the next video.